11 of 11 sectors closed green. Real estate led and energy lagged. The third quarter employment cost index rose 1.1% quarter-over-quarter and 4.3% year-over-year, with wages growing 1.2% and benefits staying flat. Consumer sentiment fell for the third straight month during October, with current and future economic expectations ticking down. The S&P Case-Shiller Home Price Index showed prices rose 1% month-over-month and 2.2% year-over-year in August, marking its sixth consecutive rise. The world's largest publicly traded uranium company, Cameco Corp, gave the sector a boost today. After beating earnings and revenue expectations, higher average realized uranium prices helped drive the strength, with executives raising their revenue outlook for the next quarter. Semiconductor maker Wolfspeed jumped 22% after posting a narrower than expected first quarter loss, even as revenue missed expectations. Meanwhile, advanced micro devices AMD fell 5% after hours, despite beating earnings and revenue expectations. As has been the case, weak guidance was the culprit bringing the stock down, and WeWork shares plummeted 32% after the bell, on news that the flexible office space company plans to file for bankruptcy as early as next week. SOFI gained almost 10% today after closing flat yesterday, after the company reported good earnings. A Kansas City jury just delivered a verdict that could shake up the residential real estate market. The National Association of Realtors NAR, Home Services of America, and Keller Williams were found guilty of colluding to inflate or maintain high commission rates through NAR's clear cooperation rule. The plaintiffs and lead attorney argued during the two-week trial that the trade group and corporate brokerages knowingly violated their own antitrust rules to reduce their commissions, and the ruling requires the defendants to pay damages of $1.78 billion, which could be increased if treble damages are assessed. The judge overseeing the Sitzer-Burnett buyer broker commission lawsuit still needs to issue his final judgment on the case. However, the guilty verdict is expected to have a significant impact on the industry's practices and open the door to additional class action lawsuits. Today's news sent residential real estate-related companies like Redfin, Zillow, and Opendoor plunging intraday. It appears that the cocktail of record high home prices and decade-plus high interest rates may be the catalyst needed to finally spark change in how the industry operates. It was a rough day for New York-based airline JetBlue, with its shares sinking to a 12-year low. The airline posted a third-quarter adjusted loss per share of 39 cents on revenues of $2.35 billion, missing expectations of 25 cents and $2.38 billion. Executives blamed a challenging operational backdrop, citing increased air traffic control and weather-related delays. Looking ahead, JetBlue increased its fourth quarter and full-year adjusted loss guidance. Rising fuel and other costs, along with slowing domestic travel prices and demand, have been a double whammy for the airline. As a result, it's reducing or eliminating some schedules as the industry struggles with overcapacity. Meanwhile, Spirit Airlines said it will have little to no capacity growth next year as slower demand and a Pratt & Whitney engine issue weigh on results. As a result, it's pausing new higher flight attendant and pilot training next month, cutting costs to weather the storm better. Overall, anxiety remains high around the JetBlue-Spirit merger. It would be the first major U.S. airline combination since 2016, when Alaska and Virgin America came together, with the Biden administration focusing heavily on antitrust cases. The Justice Department has alleged the proposed transaction will increase fares and reduce consumers' choices. They're concerned most with the lower-income travelers, who will likely be impacted most. The trial began today and is expected to take 3 weeks, though it could extend through December 5th. The earnings news and trial starting jolted both stocks, with JBLU and SAVE falling sharply over the last 5 days. Samsung predicts that the memory chip demand bottom is in, after reporting better than expected operating profits. The world's largest maker of dynamic random access memory chips said, "The bottom may be in." Its chips are typically found in consumer devices, like smartphones and consumers, which have both struggled after booming during the pandemic era, when everyone needed devices to get online. It joins Intel and others in the industry in suggesting that the market trough might be behind us. Even in the face of current macroeconomic headwinds, YouTube launches global effort to block ad blockers. The world's leading video platforms, it's implementing measures that encourage users to either allow ads or try YouTube Premium. Toyota doubles down on North Carolina EV investment as competitors pull back. The Japanese automaker is increasing its battery capacity in the U.S., raising its North Carolina battery manufacturing plant investment by $8 billion. The new investment brings the total outlay to $13.9 billion, with 5,000 total jobs created. Production at the plant will begin by 2025. Matching the timeline, it will offer an electrified version of each Toyota and Lexus vehicle. Biden's junk fee crackdown targets retirement advisors next. The new rules for retirement plan providers look to close loopholes that regulators argue allow the industry to sell products that boost their revenues at their customers' expense. It would require them to only sell commodities and insurance products to clients when doing so is in the customer's best interest. They also seek to create a higher standard for the advice provided when people roll over assets from an employer plan to another account type. X valuation is reportedly down 57% from Musk's $44 billion purchase price. A year ago, the billionaire tech giant griped that he was obviously overpaying for Twitter, but he had to complete the deal after it became clear he'd be forced by the court to do so. In that short time, the steam has come out of the technology market, and X operational issues have led to declines in the business key metrics. Those combined factors have led to a significant valuation decline, with many speculating where the company will end up this time next year.